Welcome to another edition of Solutions 360 ClearTalk. I'm Brad Malone, COO of Solutions 360, and with me today is Ken Wiesenfeld, founder of Wise Consulting. So thanks, Ken.
Hey, Brad, how are you?
Great. So Ken's been, I'll say, consulting in a number of financial areas, specialized accounting, finance, acquisition diligence, integration support for over 30 years. And we're excited to kind of bring you in, partner with you with some of our clients who really want this advanced consultative service in accounting. So today we're going to start I'll say a series of conversations.
Love it.
So what we find, or what do you find, are some of the key areas where we could stop bleeding in some of these systems integration firms?
Yeah, and again, thanks, Brad, for
You
having
bet.
me. So I think big picture first, I help consult clients with issues that extend beyond accounting and finance. And the first issue when someone says, I have a problem and I'm not really sure where it is, you got to
Right.
figure out where it is first, right? You got to stop the bleeding. And to stop, you got to know where you're bleeding. Where I tend to focus first is cash, right? That's usually the problem. That's usually when people say I'm having an issue, it's cash flow. I can't make payments to my vendors. I'm struggling every week to make sure I have enough money in the bank to pay payroll. And so focus on cash receipts, right? That's usually the best place to start. How quickly is the money coming in? So we talk about payment terms, right? I
Right.
mean, if you don't ask your client through your contracting process to make a down payment, then you're making a mistake. All they can do is say no. And I have lots and lots of clients who are very successful at getting 30% down, 35, 40, 50% down sometimes. And you tell them you've got to mobilize, it's a mobilization fee. And so that works. So if you're not doing that, that's something you really should focus on. And then collections. I've got lots of experience in collections. I was the CFO of a company, had 20 people in collections at the time. And so learned about collection practices. And the key is it's really about customer service, right? Like making sure that the invoice that you're sending is for something that the customer has clearly agreed to, that you've earned that invoice value, and that you're reaching out and making sure that the invoice went to the right place, that it's been approved for payment. And then when it's past due, quickly follow up. So focus on cash receipts first, cash disbursements. It's not necessarily about not paying your vendors. That doesn't work very well. So the best
Exactly.
thing to do is I'd say two things, is to focus on those terms, right? If you can negotiate longer terms, there's a number of vendors in the industry that you can go to them and say, I need 60-day terms. I need 90-day terms. Can you do
Right.
that? Do you have a precedent for that? And can I have that? And if you can get there, that's super helpful. Second thing is to be focused on who your vendors are. And I know it's hard to bid out, work that you
Right.
need from your vendors. It's time consuming, but often, very well worth it, whether that's in insurance or obviously the equipment that you buy, there's different choices oftentimes if you're not stuck with a single vendor. But those are a couple of things that you can do. There are others to try and manage both sides of the cash flow, the cash in and the cash out. So it starts with cash. Since we're talking about integrators, the integration business, a big focus for you and for Wise, it's about job cost. So
Okay.
looking at financial statements in and of themselves does not tell you whether or not your business is running effectively. And so if you're bleeding, you could very well be bleeding on projects and you're not really aware. You may have a gut instinct, but you got a job cost. And that's,
Right.
again, shameless plug. I love Q360. It's got a really robust job cost environment. And so I'm a big fan of that. And it's not about looking at projects when they're done only. You got to look at projects as they're happening. So interactive conversations between accounting, finance, and your operators on a weekly basis or bi-weekly basis to really understand whether or not projects are proceeding as expected. You sell it
Right.
with a proposed margin. Is that the direction in which you're headed? And if you're not, is it the customer's issue, right? Should you change order the customer, right? So there are things that you need to do. And if you don't have good job costs, you don't have a chance really at doing those things well. So.
I think, and we definitely believe it's not only a philosophy, it's like a religion or a mantra. It also takes education. We see a lot of companies that aren't using our tool, but they're using whatever tool they are, and they give a PM hours and they say, here's your hours. Well, What's the profit on those hours? Or they show no financial information at all to the project
Right,
manager.
right.
I'm like, I was just in a class yesterday. I was like, sales generates revenue. Okay. Project managers generate profit,
100%.
and
100.
accounting counts profit. And don't confuse those three roles. And then really train the PMs, just as you're saying. How do I lean in? Let's go back to invoice. Invoice early and often. I find the commercial, especially the small ones, they love to be the bank. I go to Resi and they're like, no, we're 90% down. We never use our money. So it's just that conversation of valuing money, knowing how much I have, and then what do I have to spend on it. So
Yeah, and I think your point is that the project manager plays a critical role in cash flow.
absolutely.
Yeah. If they know that a project is moving forward and a customer is in a good place, that bill should be set. And quite frankly, some of it is setting expectation right from the start as to what payment terms are.
Right.
Salesmen don't often want to talk
They,
about it.
they don't
Don't get
want
the
to talk
deal,
about it. So,
but they have to. And
yep.
that's cultural, right? And that's leadership and that's cultural. So yeah, all of those things. I think the third leg of the stool here, when I talk about bleeding, listen, I'm biased, but this is the background and the work that I've done is having accurate and timely financial statements. You
Yep.
cannot make decisions without good, accurate, timely financial statements. And those that are designed in a way that give you more than just this top level view of whether or not you made money or not. And so often, and again, thankfully, Q360 is an accrual-based financial statement. People focus on cash flow. I have clients who do cash-based accounting and think that they are making money, and they just
Exactly.
don't know for sure, right? Because it's about earnings. And these cash flows that you can manage either by getting advanced deposits, which is great, or creating a scenario where you don't pay your vendors for a bit because you want to manage your cash flow. You're just manipulating your earnings. You're not really understanding whether or not you're making money on what you do. So accurate, timely, accrual-based financial statements, absolutely critical.
So I'm sorry to interrupt.
Yeah, sure.
But I find, again, you're coming from the accounting view, but who else needs to look at those? Because I find too often times, well, the finance looked at them like they're not driving the business. They're counting.
Yeah. Yeah, you make a good point that I try and talk to clients about, and I lived it and breathed it myself. I mean, I was the CFO at two separate companies, learned how important it was for leaders, operators in the business to be, well trained, comfortable at looking at answering questions, and being challenged, right? This was performance. Why? You have to answer the why it was good or why it was bad.
Right.
And the other thing is getting them involved in budgeting, right? First of all, every company should do a budget, large or small. But if you're going to do a budget, do it thoughtfully. Don't just say, I'm going to grow 10% next year. Because if you then measure your performance and you were at 6% or 20%, you can't really explain why you beat your
How do
budget
I
or
do
you missed
that?
your budget, right? You kind of have to get to what I call a zero-based budget. And don't do budgets as a finance department. You
Because that's what I'm
have
saying. It's
operators.
more than we
Yes.
can conflate the two. And to me, it's like, no, they count. They're incredibly important people, but they don't generate. And
Yes.
so I need, again, sales and ops really that, and we have that mantra of just sales and ops planning has to be part of integral. And again, you brought up job cost. It's integral to the health of your company.
Yeah, and I've been interacting with you and the leadership at Q360 long enough now to know that in addition to just providing software, you're really trying to provide a solution to success for, from a financial and operating point of view for your clients. And I think that's super refreshing.
Cool. Well, I'll take that one and run with it. So I appreciate your time today, Ken.
You bet. Thanks so
And
much,
I
Paul.
look forward to the rest of the series that we're going to play.
I do as well.